Okay, well, we have Taher Badshah of Motilal Oswal who also joins in. Taher, hi, afternoon. The stock of the moment is Tata Motors, a fresh 52-week high on that one, and it's soaring as we speak. Do you think that for an investor who's perhaps missed out on the rally in Tata Motors, one could still buy into it now?
So I think, so again, as a matter of disclosure, this is a stock that we own in our funds. Yeah, I think broadly, we believe that the product cycle for Tata Motors is very favorable, at least on the JLR side, and that is something which is going to drive, in our view, superior growth over the next 12 to 18 months time. So that's something which will allow them to gain market share over competition, and probably there is a good amount of earnings traction that we see not just on the JLR side but even coming out of the domestic business. So I think there is a good confluence after a long period of time of both the sides of the business firing for Tata Motors, and that I believe should probably hold the stock in good stead, and probably there is a decent amount of comfort in terms of valuations as well. So I'd reckon that it's kind of more shorter leg, it has basically corrected recently, probably on account of Brexit related worries and so on, and it has just kind of recovered back. So I don't really think it has done significantly, and therefore it still has enough room and upside to over the next 12 months time for a person to even buy at this level.
Okay. Taher, hi, good afternoon. What about Infosys? This is one stock where again, your fund has huge positions, and it's been the best performing IT stock. Do you see it continuing with the leadership stuff and continuing to gain traction?
Yeah, I think we've already heard a little bit of management commentary regarding first quarter results being a little kind of soft compared to what the broad market expectations were. Although I think on as far as guidance on margins etc. went, I don't really think there was a significant amount of differential between what the market expected and margins in 1Q versus what the company has kind of indicated. So I would reckon that the story still remains intact in terms of their own growth conviction over the next 2-3 years time, led by organic as well as inorganic growth, and their ability to probably drive profitability higher compared to what it is today, led by factors like automation, etc. So I think we still like the story. We believe they are well placed and incrementally getting stronger in terms of deal pipeline and visibility of growth compared to what was the situation for them a couple of years ago. So and valuations are not as unreasonable. So we still, that remains one of our larger bets within our portfolio, and I think the story is still pretty much intact, notwithstanding some quarterly hiccups.
Okay, a quick comment from your end on the aviation stocks, because you hold Interglobe in your one of your funds, and the government has now approved 100% FDI in scheduled airlines. I mean, Interglobe's promoter holding is very high at 43%, but overall, what could the benefits be of this move?
So I think there are a couple of carriers who already have a certain amount of alignment with some global majors. We could probably see some more FDI participation in some of the other airlines, but that will kind of be good from the point of view of improving the health of the sector as well as a whole. I think more than that, the policy announcements around the aviation sector, we saw the new civil aviation policy being laid out last week, and the continuing growth momentum that we are